Hello and welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red means below average performance. In the end, based on total number of green, yellow and red star, you can take a call to buy this fund or not. Please remember, all the fund parameters we are going to discuss here are based on 26th September 2017 data as reference, and we only review regular and growth plans of mutual funds. Before we start the review, we want to inform you that we have come up with our first book, which is on mutual funds and SIP. Book is available on Amazon, Flipkart and other channels. Link is mentioned in the description of this video. In this video, we are going to review fund name SBI Balanced Fund, which is an equity-oriented hybrid fund launched in 1995. Before going into review, let's understand about fund's objectives. Fund invests in mix of equity stocks and debt instruments and is a fund which gives long-term capital appreciation with some cushion of debt income. Fund mostly have equity exposure between 68 to 72% and rest in debt. Now let's start the detailed review on each parameter. First, the fund belongs to SBI Mutual Fund family, which is currently India's fifth biggest fund house in terms of asset under management out of more than 40 fund houses and was established in 1988. So for being a very large and experienced fund house, we give a green star here. Balanced Fund was launched in December 1995. This means it is active for more than 20 years now and has seen all major markets ups and downs and hence deserves a green star here too. Fund is categorized in balanced category or equity oriented hybrid fund category. Balanced funds are those hybrid funds which invest between 60 to 80% of their portfolio in equity and rest in debt. Currently, its equity allocation is around 70% and rest 30% is in debt. Now moving to next, this fund has a large asset under management of more than 14,000 crores and is the fifth largest balanced fund in the category with around 45 options. So on this parameter, we give a green star for being a very popular fund. Now let's talk about the Moolah, that is the returns. We will first talk about the trailing returns from 26th September and then talk about calendar returns. Benchmark of the fund is CRISIL Balanced Fund Aggressive Index. CRISIL doesn't share the data of this index and hence we will not be able to compare the fund with this benchmark. Instead, we have taken Nifty 50 as a benchmark, which also happens to be the additional benchmark of the fund. We know it is not entirely fair to compare a balanced fund performance with a complete equity benchmark. Still, it is a good indicator of the performance. In trailing returns, we can see fund has consistently beaten its additional benchmark index, that is Nifty 50, as well as balanced category average across 3, 5 and 10 years. Its 5-year trailing return is among top 5 in the category with more than 45 funds. In last 1 year trailing return, fund's performance has been behind category by small percentage, but such short-term performances should be ignored in equity investments. So trailing return performance shows very good fund performance where it has comfortably beaten even a pure equity benchmark in medium and long term. Looking at calendarized return of last 10 years, that is returns from 2007 to 2016, which means returns from 1st Jan to 31st December of a calendar year, we see that fund had only one below average performance year, that was in 2010, where it was beaten by both additional benchmark and category average. There are some very good performing years as well, such as 2012, 2013, 2014 and 2015, all recent years. So what changed? Actually, the fund manager changed. Let's discuss that little later. Fund has beaten both additional benchmark and category average 4 times out of 10. But one concern here is that their performances during bear markets is much below category average. So overall trailing return and calendar year performance is pretty good, with only concern of fund's lower performance during bear markets, and hence we give this parameter 1 green and 1 yellow star. Next important parameter is fund manager. Equity side of fund is being managed by SBI Mutual Funds equity CIO and one of a very good performing fund manager, R Srinivasan. He is MCOM and MFM. He is managing this fund since January 2012 and fund's performance has been very consistent since then. Mr. Srinivasan also manages various other equity funds of SBI like SBI Emerging Business Fund, SBI Magnum Equity Fund, SBI Magnum Global Fund since 2009, SBI Contra Fund and SBI Small and Mid Cap Fund since 2012 and 13 respectively. Overall asset under management of all these equity funds is around 10,000 crores. They are all equity funds focusing on different market caps of stock market. His performance till now has been very good except in last 1 year, and which has been the story in all the funds he manages. Dinesh Ahuja manages the debt part of the fund since January 2011. We believe last 1 year performance is just a blip, especially given the clear improvements in performances since Mr. Srinivasan has started managing all of these funds, and hence we give this parameter a green star. Next parameter is to understand funds equity diversification. Starting with stock diversification, as on 26 September, fund has 61 stocks in portfolio with top 5 contributing 21.6% of total portfolio. Fund has good diversification in portfolio, but weightage of top 5 companies is higher than our balanced fund benchmark of 16%. Now looking at sector diversification, top 3 sectors contribute close to whopping 45.3% of total overall portfolio, and it shows very high allocation to financial sector. So equity diversification of this fund is actually very skewed to banking and financial sector and hence deserve a red star. Now let's understand fund's debt credit quality. Looking at this table clearly shows that this fund carries only high credit quality of debt instruments with only 2% allocation to debt instruments with less than AA rating, and hence deserves a green star on this parameter. Next are expenses. Expense ratio of this fund is 1.97%, which is much lower than average expense ratio of the category, that is around 2.2%. Exit load of the fund is 1% if more than 10% of investment is redeemed in first 365 days. Looking at a very good expense ratio of the fund, we give this parameter a green star. Now those who like numbers, let's discuss few important ratios too for both equity and debt. We will start with equity. Standard deviation, a measure of volatility and risk, is same as category and understandably lower than pure equity additional benchmark Nifty 50, which means it takes average risk as balanced category. Alpha, which measures the risk adjusted returns. So by taking average category risk, it has higher alpha, that is return potential, than the category. So this means this fund is average risk and moderately high return profile fund. Last is P ratio of the portfolio, which is 28.3 and is higher than benchmark's P of 25.7, which shows little lower return potential on this parameter. So for equity, fund is average risk and moderately high return fund with below average PE ratio. Now let's discuss few debt indicators too. Fund has a near to average year to maturity, that is 7.38%. YTM here means expected returns if you hold this debt portfolio till maturity. Average maturity of the portfolio is on higher side, that is 7.93 years, which shows fund mostly holds paper with high maturity, which means higher interest rate risk as well. Same is reflected in modified duration as well of the fund, which is much higher than average, which again shows higher interest rate risk fund is taking compared to category average. So from debt perspective, it is a moderately high risk fund but average return fund. So overall, from risk perspective, fund has average equity risk profile but below average debt risk profile. So we give this parameter a yellow star. Few other important info to note about the fund is that fund has high allocation to mid and small caps, that is around 43%. And this chart shows that debt portion of the fund has a lower allocation to corporate securities than government securities. And this table here shows how rupees 10,000 SIP would have performed in various time frames and prove very good performance and amazing returns this fund has given continuously. So if we calculate, we got total 7 green stars, 2 yellow star and 1 red star, with very skewed portfolio towards financial sector being major cause of concern. To summarize, SBI Magnum Balanced Fund is a large and popular balanced fund in the country. It has given inconsistent returns till 2011, but then change in guard happened and returns have become very consistent in last 5 years. Fund's performance has been very good during bull markets, but below average during bear phases. And this might change in future looking at consistencies in performance since Mr. Srinivasan has taken control in 2012. Fund's equity debt mix has been consistent with equity portion keeping around 70% only. Fund takes higher risk with much higher allocation to mid and small caps than peers. Two important thing to note about the fund is that it has one of the best expense ratio in the category, and second is it is very skewed towards financial sector companies. Overall a riskier bet in balanced category. That is all we have on this fund review. If you have any question, please do write in the comment section below and do not forget to subscribe to our channel for more such reviews. Have a great time ahead. Jai Hind.